Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about why I believe that it is very possible that a new rally is about to start on Bitcoin. Over just the last few days, we have seen a major correction on Bitcoin, specifically about the last week, ever since Jerome Powell and the Federal Reserve dropped interest rates by 0.25%. Over the last week, following that, we've seen Bitcoin drop roughly $3,000 to $5,000. Right now, we're trading at 113, and I think that we might be building the right shoulder of an inverse head and shoulders pattern that'll push Bitcoin all the way up to $130,000 by the middle part of next month. Today, we're going to be talking about two different scenarios about where Bitcoin is going to go, how we can trade both possibilities, and most importantly, where Bitcoin is going to go over the next 3 to 6 months. Is this bull market over, or are we going to see a lot more upside potential from here? We've got a lot to cover, so let's get started. Before we get started, I want to give a big shout out to Stampseed. If you guys don't already know, one of the best ways to cold store your own cryptocurrency is on titanium, because this stuff can withstand thousands of degrees of heat, and you can still read your seed phrases. You can stamp your seed phrases in here with this nice little hammer. Check out Stampseed with the link in the description box down below. Use JEB15 to get 15% off at checkout. Highly recommend it. All right, let's do this. We've got a lot to cover. The very first thing we want to talk about is the Bitcoin chart. As you can see here on the 4-hourly chart, Bitcoin is right now attempting to rally back up to the 4-hour 20 exponential moving average. If we are able to break through the 24-hourly EMA, then that will likely lead Bitcoin into a short-term rally. But the good news about that short-term rally is that that short-term rally would be building the very final stage of an inverse head and shoulders pattern that looks like this. Let's just kind of reconstruct everything that's going on here. If you will remember back to conference day, Bitcoin hit an all-time high of $112,000, and then just a few months later, we dropped back down to $112,000, specifically on the 3rd of August, 2025. We have built, therefore, a major zone of support and resistance right there in that zone around around $112,000, and that shows up here on the visible range volume profile. This was always a possibility, and you can even see that in this inverse head and shoulders pattern diagram that I drew like 2 weeks ago, that we very well may resist here at 0.618 to 0.65 on our way to our October 15th price target of $130,000. We might reject here at the golden pocket, build the right shoulder, and then the inverse head and shoulders pattern, which would be drawn like this, would give us a price target of, you guessed it, approximately $130,000. In fact, that's where this price target came from when we made it over 2 weeks ago now. I believe it was 2 weeks and a day ago we set out this price target of $130,000, and that price target was set out because it would be the price target of this would-be inverse head and shoulders pattern. And right now, we are seeing what will possibly be the final stages of it being created. If Bitcoin is able to break above the 20 exponential moving average here on the 4-hourly chart, then that will almost certainly send us into a short-term rally back up to 118, and this would be a textbook inverse head and shoulders pattern that would be absolutely beautiful. I want to kind of break down a few things right now about why I think that this is going to happen. I want to go back to why markets move the way they do at all. If you have not joined our Discord server, I highly encourage you to do so. Somebody posted, I need to find it, somebody posted a video over here the other day, which was just phenomenal. I'm going to see if I can find it, but someone actually made a artificial intelligence and a bot script that proved that technical analysis is actually 100% completely and totally mathematical. It's right here. I made a market simulation to see if patterns are real. This video was posted by Bjorn on September 22nd, 2 days ago. It's phenomenal. And basically, he created an artificial market, and it created the exact same patterns. And it proved all of technical analysis. The person who was making this thought that TA was basically astrology for men, he called it, but it's not. He created a completely random simulation, and this random simulation of random traders placing random orders with absolutely no psychology whatsoever recreated patterns such as an inverse head and shoulders pattern, such as pennants, such as bull flags, etc. And what I learned from that video, which is really cool, is that a big part of the reason why markets form like this is because as you dip farther into the order book down here, you end up eating up all the buys. And we even saw that happen like 2 days ago, when we saw the largest liquidation event this year. We saw $1.65 billion of longs get liquidated on September the 21st, which was on Sunday. And that drove Bitcoin into this absolutely apoplectic terror where Bitcoin dropped right back down to exactly where we wanted it to, which was 112,000. And isn't it so interesting that all the buy orders that were put below $112,000 as we were rallying back up here, because those buyers saw this level and this level, are now getting filled. You can see all these buy orders in this area between 111 and 113 got filled. And even in doing so, you can see that there is an enormous, very obvious, and absolutely beautiful bullish RSI divergence going on here on the 4-hourly chart. RSI has been updated over the last few years, so it paints it automatically. You can see it right there. And you can also see on the 4-hourly chart the bullish MACD cross coming in and the RSI breaking above the 14 interval moving average. Right now, all we have to do is see Bitcoin break above this 24-hourly EMA, and that will be the green light to head back to 118. And that brings us to the first half of the content today, and that is what's going to happen in the short term. In the second half of this video, we'll talk about where Bitcoin's going over the next 3 to 6 months and how what we're dealing with right now plays into that. But right now, I want to talk specifically about the trade setups that we see before us right now. And if you want to trade those setups with us, I highly encourage you to join our Discord server by signing up for 2bit with the link in the description box down below, depositing $100, and then sending proof of that to MalachiPats@CryptoJeb.com, our sales manager. He will get you into our Discord server for free for a year. All you got to do is sign up for the best exchange on the market. All right, how do we trade this? Well, very simply, we have to figure out what these setups are, either short or long. Now, this is primarily a long position, so we're going to start with it. The first thing that we want to do is figure out our target price. What? We'll figure out a target price for our entry price. A lot of times that is actually very much more helpful if you start at the top and work your way to the bottom. Where our target would be the neckline of the inverse head and shoulders pattern. The neckline of the inverse head and shoulders pattern sits right here. So our target in the event of a rally here would be $118,000. There's not really a bunch of other very obvious levels of resistance. You could say 115.8 because the 0.5 level off of this Fibonacci, but I'm not really too concerned about that. I'm more so looking at the 0.618 here. So we're going to put our target for this long here up to around 117,750. Our entry, therefore, needs to be low enough that we get enough of a gain to warrant the risk. Let me say that again. Our entry needs to be low enough so that our risk-to-reward ratio is high. I saw a tweet earlier today, an X post, I guess. There's no real good word for it anymore ever since Twitter changed to X. I'm going to be honest. I'm a bit of a rebel. I just still call it Twitter. Maybe I'm just a boomer. Anyway, someone said, I have lost 75% of my trades in the last 2 days, and I've still doubled my account size. And that all comes down to proper risk management. They had a win rate of 25%. They lost 75% of their trades, but a win rate of 25%, and they still 2x their portfolio. Now, who knows if they're telling the truth or not, but that is possible. All they have to do is maintain like a 6 to 8 risk-to-reward ratio. And so the way that you get a very high risk-to-reward ratio is you really come in here with the plan and you finesse your entries and your stops and your plan and all of it so that you just set it and forget it. You don't mess with the trade after you're in it. If you lose it, you lose it. If you win it, you win it. That's great. But we're going to get the target right up here as close as we can. We're going to get the entry as low as we can, and then we're also going to get the stop as low as we can. This is a trade where you can set up a very simple risk-to-reward ratio. You can get this well above 4, if not even higher. That basically means that if you win it 1 time and you lose it 3 times, you wash if you were to play this trade out 100 times, because we're dealing with a game of statistics and probabilities, which is something that we've been teaching in the Cryptocurrency Technical Analysis Academy for the better part of a decade now. What we're witnessing right now, right before us, is a second break above the 24-hourly exponential moving average. And on this candle that we're witnessing right now, it is 12:18 p.m. Eastern time. This video will be out immediately in the first cohort. It'll be out here in about an hour and a half on YouTube. We are seeing large volume come in. We saw a large volume candlestick come in here. We had a shooting star formation. But if you'll notice, we still closed above the 20 EMA. We are breaching above it right now. So basically, honestly, any time right now is a pretty good place to enter. So we'd go ahead and put our entry price pretty much right here. Now, as far as the stop loss is concerned, we're going to look for local support, and to do that, we're going to come back down to a lower time frame. We're going to look for local support, and I'm going to find these multiple highs right over here. See these highs right over here. We can therefore set this up as a very, very, very high risk to reward ratio trade, where we can be pushing like 6, 7, 8, even 9x risk to reward ratios. And if you get stopped out, fine. All you really lost was fees, and depending on your leverage, you may have lost 5 to 10%, but if it goes up to where you think it's going to go, it could end up performing very well. So for example here, this is a 3.6% movement. On 10x leverage, that's a 36% gain. On 50x leverage, for example, that's like 180% return. Jeb, that's insane. That's way too much leverage. If you don't know what you're doing, it is. There are people in our Discord server every single day that are getting 100, 200, 300, 500% returns on their trades. I mean, right here, 41%, 8.7, 38%. Let's go over to winning trades right here. We've got a bunch of them over here just to prove to you what is possible. 473% on a 10x leverage trade. $813. Sorry, these are dollars. 42%. There's the percentages, right? plus $3,000, 20%, 25%, 149%, 100%, 181%, 227%. So it is doable and it is possible. This is a trade setup that I'm looking at right now, and I'm probably going to take it myself as soon as I get off stream here. As far as the inverse and the invalidation, you would be looking for a short trade. I'm going to be quite honest with you. I'm not really too interested in short trading right now because there's just not much room to run. Our next major level of support will be down here at 110, and that's just not enough distance for me to really be excited about it. You could probably pull it off, but I personally think I'll pass. I think I will bank on Bitcoin's going to break here and it's going to rally. And then if it falls basically anywhere at all, then I'm going to go ahead and dip out of the trade because that means that we have formally rejected to the 20 and the market will fall over and go further to the downside. So that's what I think is going to happen. I think more likely than not, Bitcoin's about to return back to 118,000. I will be most likely trading that myself. Looks like I'm even losing my entry as we speak. Bitcoin's moving to the upside, right? And I think in the long term, that's going to create this giant inverse head and shoulders pattern, which is going to lead to what we've talked about with October. Now, a lot of people have talked about October and Moonvember, and historically, what you need to know is that when the Bitcoin market has a bullish September, every single year in history, we have seen a very bullish Q4. That's October, November, and December. This is the setup right now for a parabolic blow off top. A lot of people are discouraged by Bitcoin right now, saying, oh, but gold's rallying so much. And we discussed in yesterday's video why Bitcoin is going to flip gold in the future. Ben Cohen posted something the other day that said that that gold is down 99.96% against Bitcoin. Gold would have to 10x to make any kind of progress towards recapturing market dominance away from Bitcoin at this point. And part of that is because Bitcoin is a new and emerging market, of course. But even if you look at the last 5 years where Bitcoin has been very well established, it's still outperforming gold. And that's exactly what's going to happen. So to transition into our longer term technical analysis, we want to look at M2 money supply, which would be right here. The M2 money stock is a long-term chart that shows us where M2 money is going. Now, M2 money is a classification by economists of certain types of money. There's M1, M2, and M3, and as you go up from M1 to M3, they become more and more broad. So you're looking at things like bank accounts, you're looking at cash and cash equivalents, you're looking at money market accounts, you're looking at different things that would classify as quite liquid money when you're looking at M2. And essentially, this grows for one reason. When you deposit $1,000 into a bank account, the bank has to maintain 10% fractional reserve depending on the jurisdiction. In some places, they have to maintain none of it, which is like the United States. In some other nations, they have to retain some of the original deposit, but they take your $1,000 and then they loan out $900. Well, now somebody's holding $900, you're holding $1,000, so now $1,000 just turned into $1,900. But depending on the limit on how much they have to hold, it can actually grow farther than that because then the $900 gets deposited into another bank account. That bank account loans out $790, and then all of a sudden your $1,000 has turned into $2,700. You do this enough times, and what ends up happening is that 90 to 95% of all fiat currency that exists in the world is not gold-based. It is not actually real. It is debt-based. We live in a fiat currency, a fiat world, so when borrowing happens, it grows the money stock, which causes inflation. People talk about inflation being 2%, which is a complete load of manure. What we actually need to be following is M2 money supply, which has grown on average between 5 and 8% per annum for the last 60 plus years, especially ever since the Nixon administration took us off of the gold standard back in 1971. And so as M2 money grows, which is basically the total stock of money in the world, your currency gets massively devalued much faster than 2%, which is once again complete and total rubbish. Sounding a little British here, aren't I? And so what that means is that when M2 money is growing, which is growing very rapidly right now, that is almost always a bullish catalyst for growth in the Bitcoin market. At the same time, whenever gold rallies, we see a major growth in Bitcoin. And I will prove that by overlaying the two charts. If you look at the monthly chart on Bitcoin and we add in the spot price of gold here, what you're going to see is that whenever the Bitcoin market goes through a major rally, it is normally preceded, in other words, the gold market moves first, by a major move in the gold market. You can see on the line chart here, a major rally in gold. Right when that gold rally stopped right here is when Bitcoin went on its rally. It's very, very, very obvious. Right now, Bitcoin's already going on a massive rally and gold's rallying, which means that when gold stops, Bitcoin, in theory, will go on an even stronger rally than it's been going on this entire year. Because typically Bitcoin is sideways while gold rallying, but in this case, even with a gold rally, Bitcoin's doing very well. That's because of something that we've talked about ad nauseum, which is that the world is starting to trust fiat currency significantly less. There's a flight to safety. And so gold is seeing literally trillions of dollars of inflows. You can see right here, for example, gold goes on a massive rally. Right around the time it stops, Bitcoin goes on a massive rally. This is 13 years ago. This is a cycle that has played true for eons. We have a cyclical nature between Bitcoin and gold. They don't run together. They run opposite. So with gold going on this massive run that we've seen right now, it's going to have to stop at some point. If you look on the monthly chart, it is at its most overbought in like 45 years on the monthly chart RSI. Let's see if I can get this to pull up. 45 years. Most overbought that we've seen since 1980. Most overbought RSI in 45 years. You're probably thinking to yourself, man, I ought to diversify against Bitcoin and buy some gold. Terrible idea. Do that here in like 2 to 3 years after you've seen a massive run on Bitcoin. Absolutely. It's nothing wrong with having some money in gold. Gold's a phenomenal investment. That said, it is ridiculously overbought. This movement will stop at some point, and it might take a year or two, but it's going to slow down at some point. And when it does, Bitcoin is going to go absolutely ballistic, and you're going to see Bitcoin violently adjust to what it should be worth based on the M2 money supply and based on the gold value that we're seeing right now. And you're going to see Bitcoin run up to 15 to 20% of the value of gold. And with gold skyrocketing, obviously, that's a good thing for Bitcoin because that raises our price targets even more, because our price targets are largely based on parity with gold at some point in the future. And so what I see happening is a major rally back up to 118 over just the next few days. And then from there, we're going to see an explosive Q4 that will probably send Bitcoin to at least 150, if not even up to $200,000. And those are all the reasons that I believe that. I have been doing technical analysis on the Bitcoin market for almost a decade. I have told many people this over the last couple of years, that if you were to give me the 4-hour chart on Bitcoin for any point in the last 10 years, I can probably tell you down to the month when that occurred. All you have to do is give me the line. All you have to do is give me the candlestick chart on the 4-hourly chart, and I can probably tell you what month of what year that took place in. I am a foremost leading expert in the Bitcoin chart and in Bitcoin technical analysis. I do this for a living. I've been doing this for a living for a decade. Sometimes people tell me, Jeb, what do you do? What job do you have? I've been full-time doing technical analysis since I was 17 years old. The last job I had was stocking shelves at the bookstore. I've been self-taught and teaching myself how to become a world-class technical analyst on Bitcoin for over half of the existence of Bitcoin. There is not a better channel on YouTube to subscribe to learn about technical analysis so that you can understand the science of where Bitcoin is going, why it's going there, and how to invest and trade to make the most money in the Bitcoin and cryptocurrency space. So I highly encourage you, if this is the first time that you are seeing our content, feel free to go back through our catalog of almost 4,000 videos, 3,000 live streams, almost 10,000 hours on air behind this microphone, and I will bring you on a journey towards wealth in the Bitcoin and the cryptocurrency space. If you're new here, I love you. I want you to succeed. We're in this together. Make sure to hit that subscribe button. Share this piece of content with somebody else you think might find it valuable. We are so close to 250,000 subscribers, and after that, sky's the ceiling. We're going to race Bitcoin to 1 million. I would love to see you guys at the top. So make sure you subscribe if you haven't already. Stay tuned for more content. We are currently growing our team and expanding, so expect things to really just take off here over the next couple of years. I love you, and before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.